you, and today I'll be taking you through the format of manufacturing account along with an example. So here's the format, the entire format. Most of the time it ends at cost of production. However, in some cases you may have work in progress, and we'll have to deal with that accordingly. So this is the entire format. On the following slide, I have it broken down into two parts so that you know it's bigger and we can go through it more in detail. Alright, so the very first thing we have here is the name of business. Please note, once you have a financial statement, you have to put the name of the business at the top. Most of the times, they don't do that in the exam. As in, they just give you the space, you have to fill it in. Well, if you don't, obviously you lose the mark. Followed by the name of the account and the period it ends. So the very first thing we have here is we have to find the cost of the raw material consumed. That's here, right? So we put that in the final column. So that's here. So we start off with opening inventory of raw material. Right, remember it's a manufacturing account, so the first thing we are going to do is determine the prime cost. And the prime cost is made up of three things. It's made up of the raw material, direct labor, and direct expense. Direct expense, most of the time we will not have this, but it would include things like renting of certain equipment to perform a task or royalties along the line. More than likely, you will not get that in the exam, but there's still a possibility. Direct labor, obviously, people working in the job to perform, to make something or to produce something directly. And then raw material are the things that are used to produce the good. For instance, if you're making a table, then you would need wood, nails, or screws. Right? You will need hammer, but the hammer is not going into the table. Right? So, yes, so the very first thing we need to calculate is the cost of the raw materials consumed. So we start off with our open inventory of raw material. So we have here opening raw material. Please note it's just raw material. There are other inventories. For instance, we have work in progress, and we also have finished goods. Both work in progress and raw material will be in the manufacturing account. However, inventory of finished goods will be in the income statement. Anyway, we start off with inventory of raw material and we put that in the second column. Then we go ahead and calculate the net purchase of raw materials. So we have the purchase of raw materials, any carriage inwards on the raw materials, you add that on, and then you less any purchase returns of raw materials. That is not just any purchase return, but purchase return of raw materials. So we have that, and you put that in the second column, add it up to the open inventory, and that will give you the raw materials available for use. You less any closing inventory of raw material, and that will give you your cost of raw material consumed. Add it to direct wage, add any direct expense, and you will have your prime cost. That's simple, I guess. Coming over to the next over here, please note that this is just one format, one table. I just split it in halves. We have our factory overheads, as in these are costs that are attributed to the process of making the good. For instance, when we're talking about making table, obviously we'll have to get space for storing the raw material. That's gonna need rent, right? If we're using machines for cutting, it has to be depreciated over a period of time. But the thing is, it's not going to be directed to one material, to one product. So factory overheads, right? So they are not directly attributed, so they have to be shared. Anyhow, so you have the total factory overheads, you add it to the prime cost, and that will give you your cost of production. And in most cases, you might finish here. However, in some cases, you may not finish with your work, so you will have work in progress. For instance, say for instance, you're producing tables, but the tables need to be polished. So we are finished with assembling the wood and the nails and whatever. So we have tabled the entire structure, but we are left with polishing. So it means that we have work in progress. Please note this is not in all cases. In some cases, we have work in progress. So you add any open inventory, you less closing inventory as in most cases, with the exception of production budget. Right, so add open inventory to the cost of production that was previously calculated, as in here, right here. Right here. And you less closing inventory of work in progress, and that will give you the new cost of production of manufactured goods. Please know that I'm from the Caribbean, so you will hear roosters and noises in the background. Alright, so we have an example here. Complete a simple manufacturing account from the trial balance provided below. We have on the 3rd, 4th December 2018, so that's the date that we're going to produce the manufacturing account for. An extract of the trial balance of Mahabir Manufacturing Limited was as follows. MRI manufacturing account or income statement indicates whether the figure should be included in the manufacturing account or in the income statement. Or they had provided that, but I removed it. So let's go through the manufacturing account and we'll decide what will go where. So the very first one we have carriage inwards on raw material. And if we come back here, we'll see carriage inwards here, right? So this will go in the manufacturing account. Next, we have carriage outwards. Carriage outwards is an expense. It's just an expense. It's not even an overhead. So this will go in the income statement. Next, we have direct wage. Manufacturing account is part of the prime cost. Factory rent, overhead. Inventory of raw material. This is open inventory, right? So this is manufacturing account. Other factory overheads, manufacturing, purchase of raw material, manufacturing, purchase returns of raw material, manufacturing revenue, income statement, sales return, income statement. The business's inventory of raw material at 4th December 2018 was valued at $19,500. M means it goes in the manufacturing account, and machine was to be depreciated by $11,100. So we have all the items that will go in the manufacturing account. So the very first thing we're starting off with is going to be this as an inventory of raw materials. Basically, you can pause this and try and work it, and then the answer is on the next page. Okay, I did not do that. Anyway, so we have open inventory. We have our purchase plus carriage inwards less purchase return. You have your net purchases over here in the second column. You add up that with the open inventory. You have the cost of raw material available for use. That's $9,700 less closing inventory, cost of raw material consumed, direct wages. Like I said, in most cases you will not have direct expense. So you add up your direct wage with your cost of raw material, and you will have $124,800 as your prime cost. Add your overheads to the prime cost. This add on to this, and you have this. That's it. Alright, so in this case, they actually have in work in progress. So you see we have cost of production as 188,000 over here. They have opening work in progress as 12,500 and closing at 14,200. So they have the 188,000. They add the opening and less the closing. Please note you use your brackets for minusing and not minus sign in accounts. Anyway, and that will give you your new cost of production of manufactured goods, and it's a list. right? Unit cost, if we produce, say we produce 50 items, well, we use 50 because that would be too much money. So we have 186,300, and say we produce 500 items. To find the cost of unit for one, basically you divide by 500 units, and that's going to give us what? 186,300 divided by 500, $372.60. Alright, and here we have an income statement. So this is basically the normal thing you do, with the exception that we use finished goods. Well, in the normal income statement, you just use open inventory and closing inventory. But in this case, you have to use open inventory of finished goods and closing inventory of finished goods. Also, your cost of production will be cost of production of finished goods, and that's gonna come from this here. Right, so once you have WIP, so what we could have said here as well is cost of production of finished goods. Right, so that's about it. Yeah. And instead of purchase, we have this instead of purchase, we have cost of production of finished goods. So let's go through. We have revenue. This was given in the trial balance previously. We have revenue. We less sales return. We have net revenue, which is 228,700. We have open inventory added on to the cost of production of finished goods. We have 211,000. Less closing inventory of finished goods. We have cost of sale, which will be minus from the net sales, and that will give us our gross profit. And remember, we had carriage outwards. Well, that's an expense which should have been minus. And that's about it, I think. Yeah. The next aspect is absorption costing, which I will do in another video. So until then, all the best.